Thanks. Welcome, ladies and gentlemen, to this afternoon's debate. My name is Stephen Dixon. I have the privilege of being your chairman and timekeeper for this afternoon. I'm a member of the Life Insurance and Wealth Management Practice Committee and convener of the Life Product Development Subcommittee. This afternoon's debate is brought to you by the Life Product Development Subcommittee and our debaters from the committee. We hope that this new format is an effective way of presenting and discussing industry and actuarial matters in an easy and open way. We are very keen to receive feedback on how well this session has worked, what was effective and how it may be improved. A critical part of the debate is that we've allowed lots of time, 40 or 45 minutes, for a question and answer session after the debate. So I ask each of you to be active and involved in this part. Remember, there are no dumb questions. So without further ado, let us commence the debate. The topic of the debate today is product design should be consistent across all distribution channels. The affirmative team is seated to my right, comprising Yan Go, Ronald Lee and Jenny Gibson. The negative team seated to my left is HP Thang, Jill Withers and Yi Ling Yang. To keep adjudication as simple as possible, if we can do that based on applause after the debate. Now, the speaking time for the debate is 5 minutes for each speaker. A single warning will be sound 1 minute before the end of the speaking time, and a louder bell, if I can get my phone working, will sound at 5 minutes. We'll have a short pause between speakers to allow our speakers time to collect their thoughts and rebuttals. If I can remind you to have your mobiles off or on silent, please. Okay, I declare this debate open and call upon the first affirmative speaker. Yeah. Thank you.
Well, I got to do extra time. Ladies and gentlemen, good afternoon and thank you for making the time to attend today. We can't guarantee that this will be as entertaining as the recent US presidential election debates, but do believe this is an important and timely topic for our industry and for us as actuaries. Should product design be consistent across all distribution channels? Our belief is that this is a resounding yes, and by the end of this debate, we hope that many of you will agree. The current regime of products which are differentiated by distribution channels, we feel, is really a legacy issue created by distribution-centric design rather than customer-centric design. What we're saying is that if we were to start afresh today with a customer-centric approach, there is no need for differentiated product between channels. And with the technology available today, the degree of underwriting no longer needs to be restricted by distribution channel, a feature which has caused a lot of the differentiation that we're seeing between the channels. In any debate, your viewpoint will depend on whose perspective you take. The member or the consumer, agent or advisor, insurer, regulator, and so on. The lens that we consider as primary is that of the consumer. We're not saying that other stakeholders are not important. Indeed, they are. But in case you haven't noticed, established industries worldwide are in the midst of a consumer-led, technology-enabled disruption. Consumers have never been more empowered. They want the ability to transact through their channel of preference, even engage multiple channels in their transaction journey, perhaps doing some research online, and then maybe consulting with some friends, social media, and then doing the final purchase on your mobile phone. So, ignore the customer at your peril. If we feel that the life insurance industry should somehow be exempt, we need to be prepared to be left behind. So what does product consistency, design consistency mean in this context? Turning to Webster's dictionary, consistency is defined as of the same quality, always acting or behaving in the same way. free from variation or contradiction. Product consistency across channels essentially means that consumers can expect a consistent experience because the product is at its core the same, regardless of how it was purchased. I mean, if I bought some clothing online, which I don't, or in store, which I hardly do, is it not reasonable to expect that I should get the same product regardless of the channel that I bought this through? Is this true of life insurance today? Sadly, not. Variations in product terms and conditions due to these legacy issues, buried in the fine print so often in our policy documents, and extremely difficult to understand by the average consumer, means that consumers are not experiencing consistency. They think they're buying something, but when it comes to claim time, they're finding they're not covered. For example, a consumer who buys a trauma insurance policy and then believes that she's covered for a heart attack and then be denied when they've had a heart attack. So imagine buying a car that you think is going to get you from A to B, only to find out that when you turn the engine on, it doesn't even start. or for whatever reason, it doesn't get you to B through some fine print. So let's be clear what we don't mean by consistency. Definitely not that all products need to be identical. We're not saying that. Not all cars, can be identical. Families will have a bigger car than say singles or couples with no kids, unless you want a really big car as a single. We're not saying that there can't be options. We're not saying that the base model should be the same. We're saying that the base model should be the same so that people know what they're getting. Finally, I mentioned that currently, different channels often have different underwriting models attached. Direct insurance is often sold with no or very limited underwriting. The risk is then managed through a product inconsistency, like a PEC. However, our assumptions about the consumer up to date? Why do we still believe that someone who wants to interact online will not go through full reflexive online technology with underwriting with the technology available today? In summary, if we were to start afresh with the customer's viewpoint as central, can we truly justify the inconsistencies by channel that still exist today that don't really need to be there anymore? Inconsistencies that create a trust and confidence issue for our consumers. We don't underestimate the challenge that this will take in the short term, but we're saying in the long term, this is where we need to be. In closing, with the technology available today, putting the customer's needs in their rightful place, product inconsistency between distribution channels is an outdated time whose time has come to an end. Thank you.
I call upon the first negative speaker, HP.
So, firstly, thank you for providing me the opportunity to speak. Our team will be arguing against the topic, which is the product design should not be consistent across all distribution channels. The first question we asked together as a team was, what does the discussion topic mean? After several consultations, we agreed that product design in the topic should cover definitions, pricing, underwriting, claims experience, and other relevant areas related to the life insurance cycle. We feel that this interpretation is valid and reasonable because the key focus is around the customer being the center of everything that the industry does. We obviously didn't look at the Webster dictionary, but we just consulted within the actual profession. Hence, any references to product design in our team's discussion should be interpreted in the context of that. I will now outline a number of points, and hopefully in those points rebuts to some of the points that's mentioned earlier around consistent customer experience. The first point I'd like to touch on is customer choice. We think that you can basically have consistent customer experience even via different distribution channels. Having consistent product designs ignores the customer's needs for choice. Customers want choice, and what you see today is a result of that. I like to use an analogy of purchasing a car, which was mentioned earlier. Some customers may be happy to purchase a car via their employer arrangements, i.e. not having seen or test-driven the car. Others may just want to go to a showroom, test drive the car, and then purchase after that. Similar to life insurance, some customers may want to see an advisor, while others may want a simple process of purchasing a direct product without seeing an advisor. Second, product design differs by target market. Having consistent product designs could reduce the demand for insurance and worsen underinsurance, as some channels may cease to exist in favor of other channels. And this reduces the overall accessibility to insurance. So what we have today is a number of product distribution channels, and these channels complement each other. For example, direct products are tailored to be easier to purchase with limited underwriting. Retail products target more complex customers with more complex needs, and group is tailored to target the working population. Some product designs work well in some channels, but don't work well in other channels. So an example I'd like to pull out is a trauma policy, which is sold in great numbers or sold well within the retail distribution channel, but it hasn't really been successful via the group channel. Going back to my analogy again, global car manufacturers tailor their designs to each market. And so, for example, they may develop more SUVs for the Australian market because the demand is high here relative to other countries. Third, which is in the heart of our actual profession, is different pricing approaches may differ by product design, by distribution channels, and it's mainly driven by data availability within each channel. So, for example, retail pricing may rely on industry data and the company's own experience and reinsurer data, whereas in terms of group schemes, they may rely on the experience of the scheme itself. This means a particular person seeking cover may get a different price point depending on which channels they go through. Fourth, competition and marketing considerations. Having consistent product designs will stifle innovation and discourage new thinking. So, for example, wellness products, which we have in the market, may not be offered if the chosen product design needs to be consistent and only the basic design being offered. There's no incentive for companies to develop R&D solutions if it was going to be shared across all these competitors. Going back to my analogy, Tesla, a popular US electric car manufacturer, wouldn't want to develop their technological and R&D ideas if they had to share it with their competitors. Fifth, regulatory differences may exist between different distribution channels. So, for example, non-super and superannuation arrangements. Sixth, current infrastructure and systems may create a barrier to consistency. So having consistent product definitions needs to be supported by strong infrastructure and systems, which could be an issue as some companies have different systems that differ by distribution channel. Finally, underwriting and claims philosophies and practices differ by company, and it's driven by the risk appetite in the particular company. So some companies may take a more generous approach if they have higher margins in their pricing. For example, when it comes to underwriting and claims assessment. In summary, while there is some scope for consistency, for some particular areas, we don't think product design should be consistent across all distribution channels. Thank you.
I now call upon the second affirmative speaker, Ronald.
Honourable guests, good afternoon. I will reinforce product design should be consistent across all distribution channels. I will leave most of the rebuttals to our final speaker. I will cover the following three things. 1. Problems of the current situation. 2. It is better for consumers, insurers, and regulators when product design is consistent across all channels. And 3. I will describe what consistent product design is like. Now, starting from the last point, what do we mean by consistent product design? We are not saying, as per our first speaker has spoken already, we're not saying that product design should be identical. There should be room for differentiation. Let me state what we define as product design. It includes aspects such as cover eligibility, types of benefits, definitions, underwriting, and cover cessation. What it does not include is price, claims process, underwriting process, and sales process. We're saying we need a core product with standardized or minimum standard design, and if the consumer chooses, they can purchase voluntary or ancillary benefits on top. More sophisticated customers with more complex needs can see a financial advisor and purchase a more complicated product to suit their needs. These consumers can pay for that device and be properly underwritten for that product. This means that most consumers can purchase a plain English policy, which is simple to understand and consistent across all channels. No confusion. Now, problems of the current situation. The biggest issue that consumers lack is they lack confidence and trust under the current environment. Life insurance is too complex. Our customers do not understand the product and do not understand all the technical terms buried in the 100 pages PDS. From recent media attentions and complaints, we could see that the media and public lack the understanding of insurance products. ASIC, in its recent report, found there are an increasing number of complaints in relation to eligibility. In September, the Senate has commissioned an inquiry to look at whether life insurers are engaging in unethical practices to avoid meeting claims. These are the result of life insurance products being too complicated and insurance policies being inconsistent. For example, say a trauma policyholder has been advised by his doctor he had a heart attack. It is not uncommon that the claimant would find his claim is paid under one policy, but not in another. The inconsistent and complicated definitions are confusing our customers and public. Things like this give rise to a perception of big bad insurers trying not to pay claims. Insurers find themselves spending more time, money, and effort defending themselves in court or in public. The industry becomes less efficient, spending insufficient time to meet end customer needs. It also leads to issues such as affordability and value proposition for our customers. Now let's have a look at the benefits of a customer-centric approach and consistent product design between distribution channels. When there is consistency in product design, it leads to simpler and easier to understand policies. Communications to policyholders or members can be much more effective. Consumers will have the confidence about what they are covered for. They have the trust about the system, and that insurers would always pay genuine claims. Insurers can focus competing on services and price. It would reduce legal and communication costs, efficiency is improved, efforts are freed up to focus on true product innovation. Regulator will be more comfortable and confident about the conduct of the overall market. Investor would better understand the market and be more confident to invest. In short, it's a win-win situation to all stakeholders. In summary, I have described the problems of the current environment where consistent design is lacking. It is better for consumers, insurers, regulators when product design is consistent across all channels. And finally, I have articulated what consistent product design would be like. Thank you everyone for your attention.
I call upon the second negative speaker, Jill.
Thanks, everyone. Firstly, I'd just like to say that I don't think that customers necessarily want the same underwriting experience across all distribution channels, particularly if they're not in good health. So I actually think that having different distribution channels with different underwriting requirements is actually a plus. So we have fundamental differences between our distribution channels, and that's a good thing because different clients have different needs and different circumstances. If product design was the same across all distribution channels, this would limit choice as well as the ability of the insurers to meet the individual needs of the clients. I'm just going to look at three categories of distribution channels. So firstly, the advice channels, the direct or the nil advice channels, and super funds and group risk. So firstly, let's look at the advice channels. So the intermediaries here are the independent financial advisors and agents and brokers of life officers. Their aim is to know the client and to tailor their offering to suit individual needs. Advisors are remunerated by a commission, which is a percent of premium, so they tend to target the high net worth individuals. IFAs may obtain product information regarding different insurers from rating houses, and they examine these to see which insurance products have the best definitions and prices tailored to their client, their individual client. So if there are two insurers on their shortlist and they have slightly different product definitions, the IFA will pick the one that he or she thinks will best suit their client. This couldn't happen if there was consistency of definitions across all distribution channels. IFAs and agents also get important feedback from their clients, and they themselves report issues that they have selling products back to the life insurers, and this is useful information for the insurer and fosters innovation. Life insurers are continually seeking ways to differentiate their product offerings and attract sales where they perceive a need. So, for example, the high cost of trauma insurance and the fact that benefits are not always in line with the loss experience, you know, there's that winning the lottery phenomenon of trauma. This led to the severity-based trauma product. It's hard to understand how this could be conceived if product design was consistent across all distribution channels. This type of insurance is subject to satisfactory full underwriting, and premium loadings, exclusions, etc. may apply, and there could be financial underwriting as well. The second distribution channel I wanted to talk about is the nil advice. So this covers intermediaries such as the Life Office Direct channels, the internet offerings, mortgage insurance, insurance offered by credit card providers and so forth. Instead of an advisor finding the most suitable product for the client does this for themselves by checking out the various websites and so forth. So the challenges for the insurer is to design simple products that are easy to understand so that advice is not necessary. It's not as easy as it sounds, and insurers try to differentiate by the product features they can offer under limited information and by having user-friendly websites. Underwriting is often short form, 10 questions need to be answered satisfactorily, or there mightn't be any underwriting at all for funeral cover or for PEG products. And naturally, these sums insured will be lower. This targets clients who might want to talk to an advisor. They don't need to get advice because they already know what they want. Also, they mightn't be in the best of health, so they don't want to go through exhaustive health checks. And finally, super funds. This is a way of for people to obtain insurance, even if they're, not well enough to satisfy the insurer's underwriting standards. All they need to do is be well enough to work, and they'll get automatic cover up to the AAL. So, in summary, I think having inconsistencies across distribution channels enables many Australians with different circumstances to obtain some form of cover. Thank you.
I now call on the third member of the affirmative, Jenny.
Good afternoon, everyone. If my esteemed colleagues, Young and Roll, have not already convinced you why product design needs to be consistent across distribution channels, let me convince you beyond a doubt that we need to have consistent product design across distribution channels. Let me be clear about one thing. It seems that the negative are saying that it should be the same across channels. We're not saying that at all. What we're saying is that we need to have a base or a core product with minimum standards across all channels. And then if you have more complex needs, you can still apply for more complex products according to your needs. We're not saying that you should have the same thing across all, because as Jill said, you might have different needs, but it doesn't mean that you have to have the same design across all channels. So let me just go on to what some of the other side have been saying. How a consistent design limits choice and flexibility. Well, we have a different view. We believe that too much choice leads to confusion. Why can't we have a product that is a base and it's a consistent product that satisfies 99% of the population's needs? We need an insurance product that is easy to understand and it's consistent and satisfies most of our needs at an affordable cost. Not a product that is overly complicated by insurers, adding increasingly complicated and superfluous definitions in order to get a good rating from the ratings houses on the false belief that it benefits their clients. Because, let's face it, who needs all these extra bits of design that they don't need, and they even pay extra for it? It's not the right thing. The other arguments brought from the other side is to do with targeting markets. That we need to have, due to the different advised and non-advised nature of the channels, we need different products for different markets. Well, our response to that is that, yes, in group you can't have complex policies inside super, as they won't pass the sole purpose test, but why can't you have it outside super as an ordinary policy? I know it doesn't happen at the moment, but why can't it happen? There's nothing stopping it from happening, right? In the direct channel, there is no reason why you can't sell a more complex product in the same manner as the advised channel, but you would have a simple product and then you could sell a more complex product if that's what you want to do. We can't presume that customers in these channels, in the group and direct space, do not need a more complex product, in the same way that we can't presume that customers in the retail channel do not need a simpler product. And by having the same consistent product design, we can ensure that customers have a consistent experience regardless of how they purchase their product. Also, why does the retail product need to be complex? Why can't we have a simple product in the retail advice channel? As a consumer, why am I restricted to what I can buy depending on which distribution channel I buy from? I might be tech savvy and want to buy my insurance online as I know what I want. Or I might be a technophobe and want to talk to an advisor, a real person, before I buy something. In either case, my needs are the same, right? I should be able to buy the same product, right? Any other product, as Young was mentioning, you name it, clothing, shoes, electricals, I can buy the same product online at the shops. I might hire somebody else to help me to make a decision. For instance, if I buy a dress, for instance, I can buy it online or I can buy it at the shops. I can take a personal stylist with me to buy the dress. And the analogy is that personal stylist can be your advisor, and they may recommend, what's best for you if you don't know what you want. But they may also have bells and whistles in that policy that you may not need. Oh, and did I forget to mention my personal stylist also told me to buy earrings and handbags with my dress, and that is the bells and whistles that I don't need, which I might be conned into buying. A few other things that the others were saying, competition and market, that it stifles competition. I don't think so. Insurers can still differentiate on service. For example, application, claims, underwriting processes, rehab services, reputation, financial strength. And it doesn't stop innovation. It actually gives you more time for innovation because you've got your base consistent product and you don't have to spend time trying to, add to it or do anything to it. You can actually do that in your more fancy product. Is that 4 or 5? Oh, sorry, okay. I've got a few more points. I haven't got time for rebuttal. Unfortunately, Ronald hasn't helped me out. But in summary, my team's arguments are that primarily what consumers are looking for is consistency. It makes no logical sense not to be able to get the same product regardless of distribution channels. It provides greater simplicity, greater trust, confidence in the industry, and most importantly, it provides affordability and sustainability in the product. And that leads to our conclusion that product design should be consistent across distribution channels. Thank you.
That's the thing I come to myself, like, more clear right now, we like them. Yeah, I think like it.
Thank you. I now call upon the third speaker for the negative, Yeeling.
Okay, so why should product design not be consistent across all distribution channels? Now, I find it incredulous that we are saying product design is just product only without looking at pricing, underwriting, because customers is buying into the whole experience. It's the whole product offering. They have to experience underwriting, they have to pay for the price, they have to understand the ongoing support from customer services and everything. And looking at the core basic design, now customers may have very different needs. Are we looking at protecting the lifestyle, protecting the well-being, protecting assets? Different needs require different product design. And the first team also mentioned multiple times consistent customer experience. Now, we believe to have consistent customer experience, you have to meet different customer needs. The consistent experience should be that they're happy and satisfied with the product that they're buying into. But that means that to meet the needs, you need to have different product design. Have a look at the changing Australian demographics here. We need to revisit our value proposition here to understand what value to add to this. So, living alone. 30 years ago, we're looking at 10-15% of Australian household. Today, it's 1 in 4. We've got the multi-generational living. Gen X, more and more, they have to look after their elderly parents as well as the young kids. So the traditional insurance offering around just targeting nuclear family and protecting the dependents, no longer relevant today. Lifestyle renters, historically, is low-income earners who couldn't afford to buy a property. But today we have 7 million Australians renting and 30% of them renting by choice. Are we going to be having the traditional conversation around protecting their debt and mortgages? No, they don't have any mortgages. What about millennials? 2016 marked the first year where the millennials overtook the baby boomers in terms of income generating powers. And Gen Z, they're not age specific, they're any age group, but they act and they behave like millennials. And so they're smart, they're savvy, they want 100% digital experience. Am I going to pick up a 150-page retail advice PDS and put it onto a mobile app for this group of people? No, they want to be able to hit and be able to access all financial service providers, including insurance. So you can see there's changing needs in a society which requires changing different product design, and also just providing more choices for the customers here. Now let's think about what are the problems with having consistent product design. With consistent product design comes reduced competition. How would insurance marketers be able to differentiate product if product design are all consistent? And take it to the extreme. You may be faced with ACCC and legal action if product consistency is viewed as anti-competitive behaviours industry-wide. We might as well all just merge as one company and sell one product. Product consistency also result in just reduced value proposition, particularly in the distribution channels where it's more resource intensive and more process driven. But you may have situations where underwritten products or non-underwritten products will become a lot more expensive because you've got to get rid of the pegs or you've got to get rid of exclusions. I believe, very importantly as well, it limits product innovation. Have a look at the global trends here. You've got Lemonade, the very first peer-to-peer insurance company to launch in New York this year. It's all about simpler processes, fast, efficient, and I've got chat box to answer questions. You've got crowdfunding. So take GoFundMe, it's a crowdsourcing website, and they're reporting 20% of their sales is through looking at covering funeral expenses. Now that's a traditional area where you would be paying all life insurance. So this is following suit along, you've got Uber, you've got Airbnb, so it's this real-time basis, sharing of assets. So the world is moving in this direction. You've got blockchain. Now that's the digital technology that underpins the digital currency Bitcoin. And this year, 5 European insurers have formed an alliance to explore the technology in this space here. So the future is already knocking at our door here. We have to look at all these different product design across different distribution channels to meet different customer needs. So I ask you, what is the future of life insurance here? Is it a world where it's going to be anti-product innovation? Is it an industry where we're going to be promoting anti-competitive behaviours? Are we going to be ignoring emerging demographic trends? Do we not care about meeting our customer needs? Do we not want to be providing our customers with more choices? And I think the consistent answers to all those questions speaks for themselves. And therefore, product design should absolutely not be consistent across all distribution channels. Thank you.
Thank you. May I congratulate each of our speakers on the quality of the debate. They were so well prepared, wonderfully argued and very robustly constructed arguments. But to keep it simple, before we move to the Q&A session, let's adjudicate. Little pause while you consider which team you wish to vote for. But I do remember a psychological test when interviewing people was that interviewers normally select the first or last candidate that they see. Now the problem here, of course, is we have the affirmatives first and the negative as last. So that doesn't actually help me. But so if we can applause for the affirmative team, for those that think they won the debate, please. And applause for the negative team. So quite close, which I thought it might be, but I think the debate goes to the negative team. So, question answer time.